Hi, this is Tony Sagami for Uncommon Wisdom Daily. If you're like most Americans, you haven't been doing a lot of shopping lately. In fact, U.S. retail sales fell by 0.2% in May. That marked the second straight month of negative growth, and that's the first time that's happened in more than 2 years. Plus, if you back out auto sales, the May number was even worse, a negative 0.4%. Now, that report was an unwelcome surprise, because a drop in gasoline prices during the month should have freed up more dollars for clothes, food, and other products. Obviously, the numbers are bad news for retail stocks, but the problem is much bigger than that. Consumer spending accounts for 70% of economic growth, so a slowdown like this could cause serious damage to second quarter GDP. But while things are going from bad to worse here, it's a completely different story on the other side of the Pacific Ocean. China's Ministry of Commerce just reported that May retail sales grew by 13.8% on a year-over-year basis. That's right, 13.8%. Additionally, China's 100 biggest retailers increased their sales by 20.9% in the first 5 months of this year. This huge discrepancy between the retail sectors in China and the U.S. is no accident. China's government has engineered a monumental transformation from an economy dependent on low-margin exports to one driven by internal consumption. That has allowed the country to shrug off its past dependence on the West to buy its exports and focus on growing its own domestic demand instead. Now, if you want to take advantage of this massive shift, consider Global X China Consumer ETF, ticker symbol CHIQ. It's packed with China's most successful retailers, which are among the country's fastest growing and most profitable stocks. But if you're uncomfortable investing in Chinese stocks, there are also some U.S. companies that are doing great business in China. One of these is Apple, which owes much of its phenomenal growth to surging sales in Asia. Apple already has 3 retail stores in Shanghai, 2 in Beijing, and plans to open 2 more Chinese locations by the end of this year. Now, if you're worried about the U.S. economy, you should be, but don't let your pessimism lead you to ignore the booming opportunities in Asia. I'm Tony Sagami for Uncommon Wisdom Daily. Thanks for watching.